Markets are shaky, Powell's got his hawkish hat back on, and NVIDIA just got slammed by new US chip restrictions. Is a full-blown trade war with China on the table? Plus, in today's episode, we're breaking down the latest market action, the fallout from the Fed's tone, and how the Webull IPO is holding up. Stick around, we're unpacking it all. Don't forget to like and subscribe, and follow us wherever you listen to podcasts to stay up to date. Now, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host as always, Brandon Shar. Boy, oh boy, what a day we had in the markets. Let's jump right into it. So first of all, let's take a look at the heat map for the S&P 500 today. Unless I'm colorblind, folks, it's a lot of red. Microsoft was down just over 3.5%. NVIDIA, which we'll get into in a minute, had a super bad day, almost down 7%. AVGO was down. Apple was down. I mean, it's really hard just to find any kind of green on this map. I suppose, ExxonMobil, was green. You have a couple things here and there, but overall, as you can tell, just from this great visual representation of how the market's doing from the heat map, a ton of red today. Let's do a quick check-in on SPY. We talked about this last time. We were creeping up to the death cross, right? So when the 50 moving average crosses below the 200, and the S&P 500 is officially there, folks. We did have the death cross here. As you can see, we kind of rolled over today, and it's looking awfully bearish. The Qs, the tech-heavy Qs, had a pretty awful day. It says down 3%, but really at certain points today, it was more like 4.5%. Pretty bad. And the Qs also have the death cross going on here as well, 50 crossing below the 200. Just more confirmation from the tech space that we are getting into some bearish territory. Interestingly, the Dow Jones is not having that death cross yet, but it, as you can tell here, is trending in that direction. And then IWM, small caps, obviously have been in bearish territory for a while now. Typically, when you're entering into a correction or a bear market environment, tech and small caps are going to be the first things to go. So this has been kind of leading the way to the downside above SPY, above Qs, and it actually kind of finished the day here. If you look at this candle here, somewhat bullish actually, but overall, the point being the markets are pretty red. If you look over here to the left, I have some of the major sectors for the S&P. The only thing that was green today was XLE, that is the energy sector. That was about the only thing that was green today and almost finished red itself. And then lastly, let's take a quick check in on the VIX. The VIX looks like it's bottomed out, folks. We had, quite a big sell-off here from 60 and, kind of flattened out down here right around this 28 level. And now it's starting to creep back up. The VIX was up 8%. At one point today, I saw it was up, 14%. So due to the volatility that we saw. So we will see what happens with VIX currently sitting at 32. Would not really like, I don't think any investor would like to see this thing continue to creep back up, get above 40. So definitely something to pay attention to. Definitely don't want to get back here in this 50 range. Ideally, would love to see this thing cool off and get back below 20, but it does not appear that we are going to be getting there anytime soon. As of right now, things have been shaky. And you might be asking, Brandon, why were things shaky today? Well, Daddy Powell decided to drop some comments today. So if you recall, last episode, we talked about the economic calendar, things to be paying attention to for the week ahead. And one of those things was Jerome Powell speaking today, this afternoon. And the markets did not like what he had to say. According to CNBC, Powell indicates tariffs could pose a challenge for the Fed between controlling inflation and boosting growth. So some key points here. Fed Chair Jerome Powell said Wednesday that the central bank could find itself in a dilemma between controlling inflation and supporting economic growth. Quote, if that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. He said that in a speech, prepared remarks in Chicago earlier today. Powell gave no indication on where he sees interest rates headed, but noted that for the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. So this is not what the market wanted to hear today. It was more of a hawkish tone, I guess you could say, from Mr. Jerome Powell, and the markets were anticipating that. I would imagine the markets were anticipating he was going to be a bit more dovish, maybe talk about a rate cut coming up here soon. And instead, he just basically said, look, we're in no hurry to do anything right now. And that's definitely creating a lot of uncertainty. As soon as he had his comments, we saw a nosedive on the Qs. We saw SPY turning over and really just the overall market. So just to cover some of the highlights from this particular article here, Powell gave no indication on where he sees interest rates headed, but noted that for the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. Stocks hit session lows as Powell spoke, while Treasury yields turned lower. In the case of higher inflation, the Fed would keep interest rates steady or even increase them to dampen demand. In the case of slower growth, the Fed might be persuaded to lower interest rates. Powell emphasized the importance to keeping inflation expectations in check. So inflation is a big concern for Powell, for the Fed at large. Obviously, his goal is to get it back down to 2%, which is something we have not seen in quite a while. And we had the inflation reports that came out this past week when we got CPI and PPI last week, and they seemed like they're headed in the right direction. So, maybe some traders, some investors were thinking, hey, based off that data, because the Fed is always looking back in time to previous data, maybe based off of that, we could expect him to kind of give some kind of dovish statement as to interest rates, where they're headed. But we did not get that. So the market did not like that reaction, and it'll be interesting to see where we go from here. We basically moved down from a point in time where the Fed was telling us we were going to have multiple rate cuts, upwards of 5, I've heard. Then it was 3. Now it's looking more like 2. There's a high probability we get one over the summer. But, that stance could change if more data comes out showing inflation is in fact creeping up, especially with the tariff policy, a lot of the uncertainty around tariffs right now. I would imagine that Jerome Powell and his team are keeping a close eye on that, along with inflation. And they're willing at this point, it seems, based off his comments today earlier in Chicago, to sit on his hands and not necessarily rush to cut any rates. So something to pay attention to. Obviously, the market didn't like it. And just from a technical standpoint, as we just covered, with the death crosses that we're seeing on the charts, it's really not a great recipe for the bulls. Speaking of nosedives, what took a nosedive today? NVIDIA, one of the largest companies in the U.S. stock market today, was down as much as 7%. According to Yahoo Finance, NVIDIA stock dives as chip maker sees $5.5 billion hit from surprise China chip controls. Found this cool video here on Yahoo Finance. Let's check it out. Yeah, so it wasn't a great day for NVIDIA. NVIDIA stock sank nearly 7% Wednesday after the AI chip maker disclosed that it would take a 5.5 billion hit from the US government surprise new controls on its semiconductor exports to China. So this came out in a regulatory filing late Tuesday night, and as soon as it came out, NVIDIA took a nosedive. So a lot of investors not liking this new position, and that's a big hit for NVIDIA, 5.5 billion. So not great for the company. Look, I think long term, this is still an excellent company to invest in. A lot of long term potential when it comes to AI and the things that they're doing, the chips, but basically these H20 chips that they have, the U.S. from a national security standpoint is concerned about China, I guess, getting their hands on these, being able to build a supercomputer, right? There's concerns there. So it's a rough spot for NVIDIA to be in. I'm sure they had obviously plans on it as far as sales go, and now that's got to get readjusted. And this is interesting. Jeffries Curtis projected the company will take an even bigger hit to revenue, so 10 billion in lost sales over the coming quarters directly related to this. So, and then Bernstein analyst Stacy Rasgon says banning the H20 makes little sense to us. So everyone's got their opinion on this, of course, but as of right now, I mean, let's just take a look at NVIDIA just to see what it looked like on the chart today. I mean, it did kind of close the day in an optimistic way, basically overnight on, what's today? Wednesday. Yeah, overnight Tuesday was not looking great. So as you can see here, this was the drop as soon as the filing came out, and dipped today all the way down to 100 before, kind of gaining some of that before the end of the day, ended at 104.49. It in the short term, right? In the short term, it doesn't look great. It's going to get dragged down, I think, with the rest of the market. And really, NVIDIA was the thing that kind of led the way for the Qs today to take such a nosedive. Could it hit, the low that we saw the other week of 86.62 again? I think it's more likely that we're going to see that before we get back up here to this 148 area. So in the short term, I am very much bearish on NVIDIA. But hey, like I talked about on Sunday, as far as the long term, this is a great candidate for dollar cost averaging. It's still an amazing, amazing company. And yeah, this sucks. It is a setback for the company, but long term, if we're talking long term, I think it's gonna be fine. So that kind of leads me into my next segment here. So obviously, NVIDIA taking it on the chin due to the tension between the U.S. and China, and those tensions just continue to get heightened, right? Some people were very optimistic and thinking that, hey, look, Trump's going to get a deal done very, very soon. China's going to come to the table. They need us. We need them. And so far, that has not been the case. And now we're starting to see some of the practical results, I guess, of this trade tension. So according to CNBC, trade war fallout cancellations of Chinese freight ships begin as bookings plummet. So the number of canceled sailings of freight vessels out of China is picking up as ocean carriers attempt to manage a pullback in orders due to the trade war and tariffs. A steep decline in containers being shipped to the U.S. will have a big impact on the supply chain from port to trucking, rail, and warehouse economics. So this is not good news. Basically, China is beginning to, cancel some of the shipments out of China that would be headed to the U.S., and this is going to most definitely impact supply chains, and it's not going to be good. So this is just kind of the beginnings of this tension between China and U.S. from a practical standpoint as we continue to wait for some kind of clarity on this. U.S. importers are being notified of an increase in canceled sailings by freight ships out of China as ocean carriers try to balance the pullback in orders resulting from President Trump's tariffs and the escalation of tensions in the trade war. A total of 80 blank or canceled sailings out of China have been recorded by freight company HLS Group. It wrote in a recent note to clients that with the trade war between China and the U.S. leading to a demand plummet, carriers have started to suspend or adjust trans-Pacific services. So this is not great for anybody, right? When you have a country like China that exports about 20% of their goods to the U.S. and now that's getting essentially halted, that's not good for anybody. It's not good for the U.S., not good for China, and the stock market continues to react to things like this. So we're hoping for some kind of resolution soon, but here's the thing. We have all these countries that are supposedly coming to the table. I think I heard numbers of something like 130 countries. That's great. But we just need some type of headline. We need some kind of news in the market that, country X, Y, and Z, a deal has been done, anything like that. Just some of that stuff to start trickling in to give the market some kind of relief. Because right now, the Trump administration essentially telling us, hey, there are countries at the table is not enough to overcome the negativity that we're seeing right now as it relates to China and the US, because that's the big one, right? Everyone wants to hear we got a China deal in. And again, we're in a headline-driven environment. If that news came out, I would imagine we'd see a similar rally in the stock market to last Wednesday when Trump paused his tariffs. And we got that insane day. It was like the second highest recorded bull rally since World War II. I would imagine in this volatile environment, we'd get something similar if Trump comes out and says he got to deal with China. But so far, we don't have that. And so we need some of these other country deals to start coming in. And here's another thing. I've heard that these trade deals, this is not like an overnight thing. It can take years to put together a trade plan. So the fact that we have this 90-day pause is great. I just don't know, based off of what I'm hearing, if it's enough time to get something concrete that the market can stand on, a solid foundation. I don't know. We'll see what comes of it. And obviously the coming week, we got Good Friday coming up. We got a long weekend. I guess, best case scenario is, we're able to get some news over the long weekend. But at this point, you got to be on your toes because things are changing constantly. So, and then to wrap things up, maybe more so on a more positive note, wanted to highlight a recent IPO. Man, what a time for an IPO, right? Webull came out with their IPO on Friday, and boy, oh boy, has this thing had quite the run. And typically when you're dealing with recent IPOs, they are very volatile. They can be a lot of fun. And I thought this looked like a lot of fun. I know somebody out there got in here at $10 and wrote it up to 80. I mean, this is insane. And now, of course, it's kind of, leveling off here. But this was on the 14th. So Monday, what a rally this stock had. I mean, it closed on Friday, which was the first day of its IPO, at $13.25. And then again, had the high of nearly $80. So on Monday. So it was very exciting to watch, I will say that. According to CNBC, online trading platform Webull soars 375%, second day on market after SPAC merger. Founded in 2016, Webull gained traction in the US 4 years ago as people used their stimulus checks during COVID to place trades. Webull's competitors include Robinhood, Charles Schwab, and E-Trade. Shares of Webull soared nearly 375% on Monday, the second day on the market for the stock trading app, which completed its merger last week with SK Growth Opportunities Corp., a special purpose acquisition company, also known as SPAC. The rally gives Webull a market cap of almost $30 billion. That's crazy. Webull competes with Robinhood, Charles Schwab, E-Trade. The app lets investors buy and sell shares and options in individual securities, exchange traded funds, cryptocurrencies, offers charts, yada yada. We all know what they do. We all have the apps very similar to Robinhood and some of these other platforms. I just thought it was interesting how insane, especially in this seemingly bear market, it's a pretty bold move to release an IPO in this environment, and then for it to have, almost a 400% gain. I just thought that was absurd. So, so that's Webull. If unfortunately there are no options on it right now because it is new, of course, but I would imagine it's only a matter of time till they get those out. But right now you can trade shares on it. It's definitely something fun to trade. I don't know about investments though. I don't know if I would be necessarily investing in this, but it's definitely, if you're an active trader, this could offer you some great opportunity. I mean, clearly, just look at Monday. This was nuts. So there's definitely opportunity on this. Now, what I would say when it comes to Webull, something to pay attention to, coming back to China, this is technically a Chinese company, and there are some concerns with Webull's ties from what I've seen with the Chinese Communist Party. So if Trump decides to really crack down on China, this could be something that's in the crosshairs. So definitely want to be mindful of that. But barring anything like that happening, this is definitely a company that's going to be here for the long run. I think everybody remembers when Robinhood did their IPO, and actually it's had some pretty good success, I would say, since the IPO. So I'll be curious to see where Webull goes. I know that I personally use them, and they're constantly bringing out new things. They have this new premium thing they're trying to compete with Robinhood, which looks kind of interesting. And they have some cool AI features on there if you're more of a long-term investor, things like that. So that's about it, though. That's all I got as far as economic data. We don't really have anything else going on this week that I can think of. Friday is Good Friday. The markets will be closed, although the futures markets will be open. So tomorrow is essentially Friday for the stock market. And then next week we have a full week. We will be back on Sunday just to kind of, recap the week at large and see what kind of economic data we have heading into the next week post Easter. And as always, please make sure to like and subscribe, leave a comment. Let me know what your thoughts are on the market right now. What are some stocks that you're paying attention to? What do you think about NVIDIA? What do you think about its long-term prospects? Are we in a recession? Are we not? Do you think the Fed's going to, lower interest rates? Are they going to even raise it? Let me know what you're thinking. Would love to engage. Thanks as always for watching. And as always, please remember, plan the trade and trade the plan. Have a good night.